Hello and welcome to Marketing Land Live number 22. Today is Friday, July 29th. It's a little bit past 12 noon on the East Coast of the United States. My name is Matt McGee. I'm the editor-in-chief of marketingland.com and searchengineland.com, and we are here, as we are every Friday, talking about the week that was in online marketing with the marketingland.com team and friends. And as you can see, we have a full group today of our crew to talk about what's been going on over the past 7 days. A lot of news this week and stuff we will get to. Why don't we begin with, as we do every time, with introductions. If we go in alphabetical order, it will be Ginny, Tim, and then Greg. Yes, right? Okay, so you guys know the routine. Who you are, where you are, what you do, and today's question is, do you read any magazines, and what is your favorite magazine?
Okay.
Ginny,
Ginny
you're
Marvin.
up.
Yes, Ginny. I cover paid search and other paid media for Search Engine Land and Marketing Land. I'm in Portland, Maine, and I read lots of magazines. I'm a magazine junkie. So, favorite magazine is very hard to choose for me. But I guess I
17?
will. Yes, still getting 17. Uh, um, I, it's very, very hard. So I get like probably 5 or 6
Okay.
shelter magazines, like interior design magazines, but then I
Oh,
also
cool.
get the New Yorker, Vanity Fair, Atlantic, all those. But I think probably my, favorite is still the New Yorker.
All right, that's a good choice.
Yeah.
All right, Tim, you're up.
Yeah, Tim Peterson, live in Los Angeles. I cover social for Marketing Land. And on the magazine question, is that print magazines or just any
Print
magazine?
magazines.
Oh,
None.
Oh.
I need to amend that. Because most of mine are now digital
Yep.
subscriptions.
Oh.
Although I get the New Yorker in both.
All right, so that counts still as your answer then, New Yorker.
Okay, good.
All right, so print. Sorry, I didn't clarify. Yes,
Okay.
wondering if people still subscribe to print magazines.
Not me.
No. All right. So no magazine for Tim. Greg, you're up.
So I'm Greg Sterling, and I'm in the Bay Area, San Francisco Bay Area, California, and I cover mobile and location-based marketing for Marketing Land, policy stuff, other things from time to time. And magazines, I think we get the New Yorker and Sunset are the 2 print magazines. We used to get a bunch more, but have since discontinued them. My favorite magazine, I love sort of when I have idle time and I'm somewhere where there are a lot of magazines. I like looking at trashy magazines. I would consider Vanity Fair to be in that category.
Oh, okay.
Yeah.
Okay.
Where do you think I was going, Matt?
No, I didn't know.
Yeah.
But I mean, I guess the New Yorker. It's a great magazine. I like the Atlantic. I like National Geographic. I like Smithsonian.
Much higher level than my reading. So.
But I don't subscribe to those. So.
All right. Fair enough.
You know.
Well, so I already introduced myself, Matt McGee. I am in Tri-Cities, Washington, and I think my favorite magazine is either Dwell, which is a sort of a interior design. It's not interior design. It's like
Architecture and
architecture. Yeah,
It's
architecture design.
Shelter, as Ginny
Shelter.
called
Yes,
it.
Yes.
Shelter magazine. Right.
Is that like a term of art? Shelter?
It's an industry term, those of us on the inside. That's what we call those.
All right, fair enough. And I started subscribing to Time magazine again about 6 months or so ago, and I enjoy that quite a bit because it's much better than the daily news that you get on Twitter. It goes, that weekly news cycle. I think is a lot.
Yeah. And I will give my second shout out to The Week, which is I do get in print, and it is awesome, and it is a weekly, and it is fantastic.
Yeah, I'm having like major deja vu right now. Didn't we have this conversation?
We did. I think in a previous non-show environment.
Oh, all right. Okay.
Yes. All right, so shall we get into the show? For those who are new to joining us, as I said earlier, we're here every Friday right around this time. We usually go for 30 to 60 minutes, and we're going to be talking about the week that was in online marketing. A lot of stuff to get to, so why don't we just dive into our roundtable segment. There's a couple, 3 topics in there, then we'll do a quick lightning round and wrap things up. And I thought we'd do first... I guess we go whichever way you guys want to go, but I put the Verizon Yahoo news down as our first topic. That was earlier this week. Verizon bought Yahoo for $4.83 billion. Greg, do you want to sort of give your big takeaways? If you want to go first and sort of what the big takeaway, what this means, kind of thing.
Sure. I mean, there's sort of a couple of angles. One is the end of an era. Yahoo, the original sort of web portal with AOL and search engine, now gone, or now subsumed into this larger corporate entity. The other angle is, sorry, Verizon is sort of trying to become this media company, diversifying away from its traditional businesses. Now another product placement, Swell by Google, or Google by Swell. Verizon is differentiating away from its landline business and its sort of telecom identity, and is now this sort of online mobile advertising, digital media company. And I think that's very interesting. The question is, will it continue? What will be the integration process between the AOL asset and Yahoo? I think that's very problematic, potentially. I also wonder about how much Verizon is going to continue to invest in technology, and how much autonomy the digital entities will get under Verizon. They could sort of do a Disney model. Disney bought Marvel Comics and Pixar and Star Wars, and they've allowed each of those units to have relative autonomy, and they've succeeded accordingly. Star Wars is the newest. So I could see Verizon pursuing a model like that after some sort of integration between AOL and Yahoo, and doing okay, but are they going to continue to invest to be competitive with Google and Facebook and others?
Yeah. I mean, I guess on that, the investment piece, I mean, I do think it's interesting that since Verizon has bought AOL, AOL has been able to remain independent. They've still been acquiring ad tech pieces here and there. So I agree. It will be interesting to see what they do. My assumption is that they'll be able to sort of live under. I mean, what Yahoo actually ends up looking like, that's a big question. But I would assume that as an AOL itself will have fairly decent autonomy within itself. But.
Yeah, what I'm trying to picture. Like, what is Yahoo going to look like, a year from now, or 3 years from now, or 5 years from now? I mean, it's likely to be a very different looking company.
Yeah, undoubtedly. But I mean, they're going to preserve the Yahoo brand, I would think. That's one of the big assets of this acquisition. Is the I mean, it sort of cuts both ways in some sense, because it's a little bit diminished over the years. But that's the Yahoo traffic and the Yahoo brand recognition is still quite significant. The third largest U.S. internet company. So I would think that they would make some effort to preserve some number of Yahoo properties and the Yahoo homepage and Yahoo Mail and all that.
Well, TechCrunch said the Yahoo brand going away next year, I thought.
Did they say that?
Yeah, TechCrunch reported that on Monday.
I didn't even see that.
Blurry.
And in favor of what?
They didn't say that. They just
Verizon
said that.
who? Very who?
Verizon who?
Well, so that's interesting. So then that really just becomes about some the personnel and the technology and some sort of distribution back that they have. But I mean, if you kill that brand, then
right.
you kill the homepage traffic. And
that's what I was just going to say. Like, are like you go to Verizon.com and is it going to start to look like what Yahoo.com looks like right now? Are they going to turn themselves into?
I'll tell you, nobody's going to go to Verizon.com.
No.
Or
I mean,
Well, if they
yeah.
have a redirect from Yahoo.com to whatever the new site would be, I could see that working. Because, I mean, AOL had even been discussing earlier in the year or getting rid of the AOL brand. They haven't yet. The plan that I had heard in January was that they were going to announce something along those lines in March. And then Business Insider had reported something about it, I think in February, where AOL was like, yeah, it's something we're looking at.
Yeah, but that's a different situation because the AOL brand had been much weaker for a much longer period of time. AOL is like an ad tech company, right? And the success of that business is less dependent on the AOL corporate brand than it is the assets in the subsidiary brands like Huffington Post or TechCrunch or TechCrunch or whatever. And I think the Yahoo brand is a much bigger brand than AOL at this point, and so I think it's a different issue.
Yeah, from a consumer perspective, certainly. And I do think it's interesting because, I mean, one of the big reasons that Tim Armstrong, AOL CEO, has said for buying it is to get the scale of the users that. Am I echoing? No.
A little bit, but go ahead.
Okay. That the reach that Yahoo has, and that the goal is to go from 1 billion now to 2 billion in a year. And so the rebranding piece it'll be interesting to see how that goes, because that's a thorny risk there.
Jenny, what does it potentially mean for on the ad side for with Yahoo having its relationship with Bing and all that sort of stuff?
Yeah, I mean the whole. I mean, on the search side, that is just a ridiculous, soap opera of partners. I mean, it's hard to even parse what everyone's doing there. But you've got Yahoo distancing itself from Microsoft in the Search Alliance. That's sort of going away. I mean, Microsoft is still serving 51%, up to 51% of desktop is part of that. And then you've got Google serving more and more ads on Yahoo as part of their deal. And then you've got AOL is managing Microsoft's display in most markets. And you've got Bing serving the search results for search results and ads on AOL, taking that over from Google. So it is, keeping this straight is not easy. And so what this does, I mean, it'll be really interesting to see how this impacts what the Yahoo Microsoft relationship looks like in any way. I mean, in that the AOL deal with Microsoft is a 10-year deal. So you've got 4 more years left of, 5 more years just about left of the Search Alliance. So I don't know.
Big questions.
But I mean, if the question is Yahoo coming back as a major search entity? My educated guess is no.
Yeah.
So.
And Tim, what about Tim? You've been keeping an eye on Tumblr at times, Flickr as well as our social guy. Do we know anything about their future at this point?
Nope. Don't know about either. I mean, Flickr, it's almost amazing that it's still a thing.
I know, isn't it?
You never hear about it. And given what Google and Facebook in particular are doing in the photo space, I don't know the role of Flickr anymore, especially with Yahoo turning Flickr into more of a paid thing when it comes to the storage side, with Facebook offering free storage for photos. And Tumblr, no idea. I don't know. Tumblr is very commoditized at this point.
All right.
Yeah, it's the ad tech piece. It's going to be really interesting to see how they merge all that. You've got Brightroll and Flurry on the Yahoo side, and then AOL has 3 or so other exchanges under its one umbrella. So making sense of all that, I guess. AOL right now has been built on merging and melding and acquisitions and tweaking existing ad tech and making it work into a platform. So I mean, if anyone could make this work, I would think that AOL has the most experience at, at this, but it's going to be a major undertaking, and not to mention the fact that they don't really even. I mean, during this whole auction process, the regular discovery that you would do didn't happen. So they're just seeing what they've got.
Well, one of the interesting questions that you sort of raised by implication, Ginny, is whether or not the dominant sort of culture will be AOL's culture. You know, whether AOL will become the dominant entity from a kind of management standpoint, and Yahoo will be kind of subordinate, intact in some respects, but otherwise, sort of turned over to AOL leadership. And I think originally my assumption was Marissa was going to go because she's got that package. But it sounded like she might be sticking around for an uncertain period of time. Is that what you guys understand?
What I understood is she'll stick around during the
transition
6 to 9 months that this thing's going to take, and then we'll probably.
Well, I mean, she's got the financial incentive and otherwise the corporate incentive she doesn't want to be some, sort of 3 layers down now or something like that. I think, it doesn't make any sense for her to stick around. This is kind of a face-saving move for her tenure as CEO. Makes sense for her to take the money and get out and move on to the next phase or whatever, rather than sticking around.
Yeah.
Plus, Yahoo's so diminished in the executive ranks. Like, who would there really be to kind of be on that AOL tier in the combined structure?
I don't know.
Because, salespeople, a lot of their top sales execs are gone. Prashant left. Simon Clough's still there, but AOL has their ad tech folks. I don't know if what Simon's role would be. AOL also has better ad tech than Yahoo does, and has been able to do more with their ad tech than Yahoo does. So, if anything, I think from an ad tech perspective, the Yahoo deal might be an acqui-hire more than an asset acquisition.
Well, I mean, it's interesting. Then we can sort of see the whole thing as an AOL acquisition of Yahoo. They had wanted to merge before, or Tim Armstrong did. So in one sense, this is an AOL acquisition of Yahoo through a corporate parent.
Yeah, I mean, somebody else I was talking to at Acquisio was saying that the real challenge that Verizon has isn't so much, all the talk from AOL anyway on this side has been about taking on Facebook and Google. And his argument was it's really about, forget that. It's about the streaming side of it. It's about Netflix and Hulu and I guess to some, Amazon on that end. And that, Verizon has that Go90 app that they debuted last year, I believe, with, they're investing in original content, and Tim's face right now kind of just says it all. I mean, that's barely getting any traction. It's a huge investment, and they'll have a real uphill battle there. I mean, I think on both sides it's a big challenge. I mean, the argument is, well, on the Google Facebook side, being number 3, there's still a lot of money in it, and to get into it for $10 billion between with AOL and Yahoo, Verizon's getting in pretty cheap, and for third place can just sort of coast around. But we'll see.
I know, Matt, you probably want to move on to another topic, but just it's worth flagging this. We haven't really talked about the mobile advertising side for Verizon. Verizon's a wireless carrier with Flurry and with other ad tech and assets that they have. I mean, that's obviously got to be a big element of this for them.
Yeah, I think the Flurry piece that that Yahoo brings could be important, and I think the Bright Roll. I mean, I think that's still has some potential for to kind of fill in some pieces that AOL is missing. And then the other thing, I mean, I still think that Polyvore Poor Polybor. I mean, I think that acquisition on Yahoo's part was sort of one of the more bizarre, if not more interesting, acquisitions of theirs. And so, what do they do in this? And are they just going to be left like a tumbler on the floor? So I don't know. So much to think about.
All right. Well, we should move on to another topic.
Yeah.
Did we covered everything? Verizon, Yahoo. I think we probably have 4.83 billion, right? Wasn't their offer like 44 billion? A few.
Yeah, it's roughly 10x less
Wow.
than what Microsoft offered in 2008.
Wow. Ouch. All right. We'll keep watching that. Let's move on to topic dose. More business stuff. A lot of earnings this week. We have covered, my gosh, Facebook. Well, let's just dive in right there. So there was Facebook, Twitter, Google, Amazon, and probably one or two others, if I'm remembering correctly.
Apple.
That's right. I didn't put Apple down. Facebook killed it. Google killed it. Very strong. Amazon killed it. Apple was strong. And then there's Twitter again. Is that a good way to sort of sum up things this week?
Sounds
Yep,
right.
pretty much.
I would say just by way of clarification on Apple, Apple experienced declining sales, except they beat expectations, right? People had expected lower sales in certain categories than they delivered, but so they did pretty well, but not great. I mean, it wasn't great. It's still a $44 billion quarter for them, if that's correct. Tim, am I remembering that correctly? Or Ginny? I don't remember the number.
I think you're in the
ballpark,
Yeah.
a billion or two
Ballpark.
off.
Yeah.
You know,
And Twitter would gladly trade places with them.
well, Twitter would take whatever Greg just left off the rounding error.
Rounding error. Let me just make a Bernie Sanders style comment here. I'm not a Bernie supporter, but just these companies are being sort of ruined by being public companies in a certain sense, right? We talked about Tim, you wrote about the ad load question for Facebook and how they have to keep pushing more and more ads into the news feed to keep growing. And Twitter, which is a terrific company, is getting pounded because they can't generate the growth that investors expect, and Apple with its huge quarters is still disappointing investors. It's all about sort of growth and beating expectations, and this is what the markets demand. And I think it's unfortunate because it distorts some of these products that I mean, Facebook is a great product, but if they keep pushing more and more ads at us, that's a problem, and it'll alienate users. Anyway, so that's my little quasi-political moment for anti-capitalist moment for Friday.
Well, I do think it raises a really good question, though, is when, or point, is that the going public, you pitting consumer interests against shareholder interests.
Exactly.
And shareholder interests not being the, people who own shares here and there. It's a major investor,
right.
Institutional. So, yeah, exactly. I mean, what summed it up for me, I think, was a year or so ago, this is not the same industry, but kind of goes to this point, is the JetBlue. There was an analyst that said that JetBlue CEO was being too customer-centric in that they weren't, charging for all the baggage fees and leveraging all the different types of fees that all the other airlines were doing, and that that CEO should go because they're too customer-centric.
Or not customer-centric. Oh, yeah, I get you. Okay.
Too customer-centric and not looking out for the shareholders enough. And that CEO was ousted.
Well,
So-
and
It wasn't squeezing every dollar that he could out of the...
that's an illustration of, so that's what Google initially with its two-tier, and Facebook by the same token with its stock structure has tried to avoid, is the kind of short-term investor mentality that you're just describing. So Google has made a big point over the years of saying we're taking a long-term view. Our investments are really about growth over the long term, improving the user experience, which will translate into benefits to shareholders. And notwithstanding that, and I think that's the correct logic, the pressure these companies all have to succumb to the pressure. I mean, look at Google now. All these different business units are having to generate revenue and pay for themselves, and on one level that's good business. On another level, it's sort of undermining, Google's longer-term objectives in some sense, I think.
Yeah. Yeah.
Tim, Greg mentioned the ad load issue with Facebook. Do you want to sort of unpack that a little bit and just explain it, like, as they're saying that they're running against up to the what they consider to be the limit of how many ads they can show? Is that what they're saying? Am I, as a Facebook user, am I going to start seeing more ads in my newsfeed, or are they saying they've sort of reached what they think the limit is?
Yeah, so this is how I explained it to my girlfriend the other day. It's basically like, if you think a couple years ago you were seeing one ad per every 10 posts in your newsfeed, since then it's gone up, and let's say it's now at 3 ads for every 10 posts. It's going to keep going up a little bit over the next year to, let's say, a year from now it'll be 4 ads for every 10 posts. And Facebook thinks, and again, that's a hypothetical number, but Facebook thinks that's the magic number. That's the balance, and it's not going to be able to do 5 ads out of 10 posts, or increase the ad load any more than that, increase the ratio of ads to organic posts, which is good for Facebook from like the customer-centric point of view. Like, if you're checking Facebook and half of the posts that you're seeing are ads, or more than half are ads, you're probably going to check Facebook less often, because it's going to feel like reading the classified section in the newspaper. But from Wall Street's perspective, the ad load is it's one of the most important factors in terms of revenue growth for Facebook, but it's also the factor that Facebook can control the most. It can't force advertisers to pay more per ad or to be buying more ads. It can't force more people to start signing up for Facebook. It can't force people to check Facebook more often and then be exposed to more ads on any given day. It can try to do things to encourage that kind of thing, but it doesn't have that much control over it. Ad load, it has control over. It can say, okay, we need to make some extra money this quarter. Let's boost it up to 5 ads for every 10 posts. But now they're saying we can't be doing that anymore. A year from now, we're not going to be able to do that anymore. This is going to be a less significant factor. So, from customer-centric point of view, totally smart, makes a lot of sense. From a Wall Street money-hungry point of view, it's come on, guys.
Hey, Tim, what about the idea of content-specific news feeds, which I was reading about? Is that something is that just a pure rumor, like different news feeds for specific interests?
Yeah, I mean, that's been talked about. Like, everyone's, for at least years been talking about, like, oh, when's the Facebook video app going to come out? I imagine that's more likely than like an article app or an article only news feed. But they haven't said anything. As far as I know, they're not testing anything.
Is paper still around? Is that what it was called?
Yes. They shut that down like a month or 2 ago.
Oh, okay.
That's what it was called. Yeah, I mean, it's interesting because the idea of building out a larger portfolio of apps makes a certain amount of sense, and Facebook has sort of placed its put its eggs in that basket. But this shuttering of paper and the Facebook home failure and other things shows the limitations of that approach. They can only do that with so many things. So.
So let's talk about the opposite side of the coin. Let's talk about Twitter for a second here. Is Twitter going to be around a year from now? Is Twitter going to be bought within the next year?
Will they be around? Yeah, I mean, they'll definitely be around. They're making plenty of money, and they keep making more money. Like, it's not like revenue's not growing.
Right. It's just
profit. They're not turning a profit, which is tough proposition for a public company, especially one that's not Amazon. Will they be acquired in the next year? I mean, this is another really interesting implication of Verizon Yahoo, is they kind of then own that second tier of just under Google and Facebook. and Twitter's position then goes down by comparison. Twitter was considered like at the top of that next tier. Uh, Not anymore.
I mean, I think, Matt, that there will be institutional investor pressure to sell itself if it can't, generate growth. I think we'll start to hear investors, say that kind of thing more and more. Like, that's what happened with Yahoo, right? I mean, Yahoo wasn't able to turn around its core business, and then they had to do something to satisfy the investors. Otherwise, the board was going to get ousted, Marissa was going to get ousted, and so they sold themselves. And I think that that's a very likely scenario for Twitter down the line if they can't generate more, more growth to satisfy.
The Yahoo stuff played out over several years, right? I mean, it predates Marissa. I mean, they had CEOs that were tasked with turning Yahoo around, and obviously it never worked. And so I guess the question would be how many second chances does Twitter get to sort of right the ship and get on an upward trajectory?
Interesting tipping point could be their fourth quarter 2016 earnings, because that'll be the first full quarter where they have the NFL games. They'll also have like all these other deals that'll be in play at that point. The 120 Sports original shows, the Bloomberg shows, everything else, and so that's going to be the first time that Jack Dorsey's strategy that we're going to get a real report card on it. Right now they can say, oh, we're doing all these deals, none of them have come to fruition yet, or we haven't been able to show you results. They've already couched their third quarter 2016 results as, well, we're going to only have 2 football games in the third quarter, so like we can't really judge those results yet. The fourth quarter, they're not going to have anything to hide from.
Yeah, that excuse goes away.
And Twitter doesn't have an Alibaba. I mean, that Alibaba stake gave Yahoo so much more running room and time to try to fix things than otherwise I think would have been tolerable.
That's a good point as well. All right, let's move on to topic number 3, which is several. Boy, I saw a lot of discussion about this on Twitter, Ginny. The AdWords news, the expanded text ads, the double headline, etc. That's now live.
Yeah, now live. So expanded text ads, they're the double-headed. Double headline ads, and now we've got 80 characters in the description copy. So yeah, they're rolling out now. They're live to everybody. Everyone can start uploading them. It's a little bit funky. They're running side by side with the standard text ads, so advertisers will have both running in their accounts. And on Wednesday, I believe, AdWords also updated AdWords Editor, which is the desktop tool that makes it easy to manage ads in bulk and update ads in bulk. So they updated that for expanded text ads. But so we're really sort of right at this beginning point of this giant shift for advertisers who are now having to rethink how they write text ads. That has been the way that we've all done it for 15 years. So it's a huge shift, and it is also this kind of big unknown into sort of what impact this is going to have. So Google, when they announced that they were going to launch expanded text ads, said early tests had shown that click-through rates could be you can see a click-through rate lift of up to 20%. Whether or not we actually see that remains to be seen, and I'm actually about to publish some data that Merkle just released this week on what they have found for expanded text ads, and it is it's not 20%. So and for brand, actually, what they found for brand queries is the expanded text ads almost make no difference whatsoever. And the interesting thing is that Google really touted this as a mobile move to give users more information about businesses before they decide whether or not to click on an ad from their mobile device. And that also, those those rates. It's, at least from this early data, it's not showing that that's actually what's going on. So it's going to be a couple of months. We've got until Google said October 26th before is the cutoff date for being able to add new standard text ads, the original version. So we have about, what is that, 2-3 months until 2.5 months until that happens. So there's going to be a lot of work for paid search managers.
So we talked about this when the news first came out a few weeks ago, and I think I mentioned then that I'm in the set it and forget it group of advertisers.
Oh, yeah. Right.
Are they? I have not gotten any email or notification from Google saying this is here. You need to start changing your ads.
No, it's yes, right. And you probably, I don't know when you will. They may wait until, I don't know,
October 25th.
Yeah, yeah, but they may just wait for because they're, they had to get editor up. There are I don't know. They have issued a new best practices manual or handbook, whatever you want to call it. But I would assume that messaging to advertisers will start coming out in the next few weeks. But yeah, I think it's going to be a fairly, I don't know, for a lot of advertisers, I think it's going to be a bumpy switch.
Yeah, I saw a lot of people on Twitter, just the PPC folks, just kind of struggling with this new format, and you wrote an article about the truncation and all that sort of stuff. It's
yeah. And I guess I tried to write my first expanded text ad, I don't know, I guess in May, and it's very different. I mean, it's really, if you've been in this routine of 25, 35, 35, it's, you think, oh, wow, I have all this extra space. And you either want, like, one more character, can I just have 31 characters? That's what it's
going to be. That's what it's going to be like if Twitter ever goes above 140. We're all going to be like, well, what do I do with this extra characters?
Yeah. But I have to say, I'm going to be interested to see how these actually play out, because I have found the decision to add more characters to these text ads, and with the argument being that it's going to be good for mobile, I have found that a little hard to swallow. I am personally not looking to read more, and I could see in the headlines that seems to make sense to me, but adding more description copy, essentially fine print, it seems like an odd proposition. So I think it'll be interesting to see what advertisers actually end up seeing from this couple of months of testing, and how much, sort of what kind of character limit bounds we end up seeing. But.
All right, fair enough. Shall we move on to the lightning round, folks?
Sure.
Can we do that? I think we should. Let's head on to the lightning round. Just 2 items in the lightning round. Tim, you want to talk real quick about, so Twitter is launching a big ad campaign again to sort of explain what it is, and you were, to say the least, not impressed with the approach that they're taking, right? Is that a fair way to say it?
It's just not new. Like, felt like Twitter got a lot of credit for the campaign and for doing something. This is an idea that Biz Stone had in 2009, I think it was. Where it's, oh, what's happening? That's our tagline. That's how we explain ourselves, or that's how you can explain your, what Twitter is to your dad. And I mean, the videos, they seem fine. I don't know. Like, if I'm not someone who, like, they said the stat is like 90 or 91% of people know what Twitter is or are aware of Twitter. And so, like, the video doesn't, if I'm one of those 90% of people who knows what Twitter is but doesn't use Twitter, there's nothing really in the video that makes me think, oh man, I really need to go to use Twitter. It's, oh yeah, this is just like my Facebook feed. Cool.
It's amazing that they still have to explain this.
Yeah.
After so long.
As my mom said when she signed up, now what with Twitter?
Now what? That was the question.
Yeah, well, NPR said, we follow us on Twitter, so she did, and then I get this email. Now what with Twitter? I don't
Yeah,
actually, yeah.
it's so strange with dealing with the people that don't get it, but
Yeah.
wow.
Yeah.
All right, Jenny. Topic number 2 in the lightning round is yours, and it's back to more AdWords news. Converted clicks.
Yes, converted clicks is going away. So for a while now in AdWords, advertisers have been able to choose whether they were going to use converted clicks to count conversions or conversions to count conversions. And now I'm going to start making no sense to, anyway, this is sort of in the weeds, but so converted clicks was sort of the first iteration of AdWords conversion tracking and measurement within the platform. So then conversions came along and has conversions that it kind of is used to power the automated bidding pieces that AdWords has now built into the platform, and you can kind of get a little more granular in the way that you are tracking conversions. There is a little controversy with the removal of converted clicks because a lot of people were using converted clicks for being able to track for lead generation. So to be able to track, not every single download. They didn't want to track every single download for PDFs, for example. They just wanted to count that as one conversion. You can do that in conversions, though, as well. There's a kind of a count setting. So, an e-commerce person can count every single conversion that comes off of after an ad click, whereas somebody else can say just one, if they download 30 PDFs, I just want that to count as one conversion. The controversies coming from there's rumors that Google's going to remove that, and I am trying to get confirmation one way or the other on that. I have no idea why on earth they would do that, but if they do, that's going to be an issue. So hopefully to track that down today.
All right. Fair enough. So we'll keep an eye on that. All right, I think that's all we put in the lightning round. So we're at about the 45 minute mark. Why don't we wrap things up, gang? Just real quick with what's coming up in the future. I should mention we have SMX East coming up in late September 27th through 29th. That is in New York City. And early bird rates are still good for about the next month. August 27th is when early bird rates. So we hope to see a lot of folks at SMX East, where we are going to be doing a lot of explanation of all the AdWords stuff Jenny just explained, right?
Yeah.
All right. So why don't we we'll wrap things up. Let's see, Jenny, you want to go first? Where can folks find you if they want to ask any questions or just connect with you online about anything we talked about today?
Easiest way is Ginny Marvin on Twitter.
Tim?
Peterson T on Twitter, Instagram, and Snapchat.
And Greg Sterling?
G Sterling on Twitter.
Awesome. Thank you so much. All right, I'm at Matt McGee on Twitter, and you can find our websites on Twitter as well, at MarketingLand, at SEngineLand. We're also on Facebook, facebook.com/MarketingLand, facebook.com/SearchEngineLand, and you can find the podcast version of this show that's out every week on iTunes or Google Play Music. Just do a search for MarketingLand, and it should come up. So I think that wraps it up. Jenny, Tim, Greg, thank you so much for joining us. And thanks to all who tuned in on Google Hangouts this week or on Facebook Live or wherever you might be watching. We will see you next week. Thanks very much. Bye.